Hello, Sacramento investors. I'm Ron Benning, real estate investment expert, and welcome to your Sacramento Duplex market update for June of 2026. The big headlines this month is that the Sacramento area duplex market remains a seller's market despite the interest rates hovering near 7%. But we're beginning to see signs that buyers are gaining a little bit more negotiating power. Inventory has increased, properties are taking a little bit longer to sell, and sellers are becoming a little bit more flexible on pricing, creating some interesting opportunities for investors. Before we get started, if you enjoy investment real estate marketing updates like this, please hit the subscribe button and turn on the notifications so you won't miss an important update. Let's dive into the numbers. The greater Sacramento duplex market currently has 2.9 months of inventory based on closed sales. Generally speaking, less than 3 months inventory is considered a seller's market. Between 3 and 6 months is considered balanced, and more than 6 months a buyer's market. At 2.9 months of inventory, we're still technically in a seller's market territory, although we're sitting right on the edge of a more balanced market environment. Inventory increased significantly from last month, rising 28%. However, active listings remain about 12% lower than they were a year ago at this time. What this means for investors is that there are more opportunities available today than there were earlier this spring, but overall inventory remains relatively tight for duplexes by historical standards. Buyers are seeing more choices while sellers are facing just a little bit more competition. Demand remains healthy but has cooled somewhat compared to recent months due to the elevated interest rates. There were 33 duplex sales during the period from May 1st to May 31st. That's a substantial increase of more than 43% compared to the same month last year. However, sales declined approximately 23% from the previous month. Pending sales showed a similar trend, dropping nearly 36% month over month and 27% compared to last year. There's no doubt it's interest rates that have caused this big change. This suggests that buyer demand remains active but is no longer moving at the pace we saw earlier this year. Pricing continues to show stability. The average sold price increased to $618,000, representing about a 6.7% increase from last month. While those numbers are encouraging, both average and median price trends remain classified as neutral over the past 6 months. In other words, prices are not rapidly appreciating or declining. Instead, the market appears to be settling into a more sustainable and predictable pattern. For investors, that often creates a more favorable environment for long-term acquisition decisions. One of the most interesting shifts this month is in negotiating leverage. Average days on the market increased to 46 days, which is approximately 44% higher than this time last year. In addition, sellers received, on average, 96% of the original asking price. Those two metrics tell us that buyers now have more room to negotiate than they did during the highly competitive market of the last few years. While quality properties still attract attention, investors are finding more opportunities to negotiate favorable terms than they have in recent past. One metric we track every month that is especially important for real estate investors is the break-even gross rent multiplier, or break-even GRM. This month, the break-even GRM for a duplex in Sacramento is about 11.85. For those unfamiliar with this metric, the GRM, or gross rent multiplier, is the price divided by the annual income. That number represents how many years worth of annual income it would take to pay for the property if there was no loan. The break-even GRM represents the point where a typical investor can purchase a property and approximately break even on cash flow using today's market rents, operating expenses, financing costs, and ownership expenses. Properties trading below the break-even GRM generally have a greater likelihood of producing a positive cash flow from day one. And obviously, those above the break-even GRM will not make a positive cash flow or break-even from day one. Comparing the market GRM or the break-even GRM provides investors with a quick snapshot of how attractive current market pricing may be, and it makes finding the best deals quick and easy using our weekly GRM reports. So here's the three biggest takeaways from this month's report. Number one, the duplex market remains a seller's market with just 2.9 months of inventory, which is in sharp contrast to the 38 months of fourplex inventory in Sacramento right now. It just goes to show different market segments create different opportunities in the same market, and that's why talking to us, we can help you find the best deals. Number two, inventory is increasing, creating more opportunities and reducing some of the competition buyers experienced earlier this year. Number three, pricing remains stable while negotiating leverage continues to shift slightly in the favor of the buyers. In closing, if you'd like a copy of the full market report that I referenced throughout this update, you'll find a link in the description below. You can also scan any of the QR codes appearing on the screen to access the reports, to search available investment properties, to download investor resources, or schedule a consultation with me. If you're considering buying or selling, or completing a 1031 exchange, or even adding investment properties to your portfolio, I'd love to talk to you. I'm Ron Benning, real estate investment expert. Thanks for watching, and I'll see you next month with another Sacramento Duplex market update.